Hello again. I am Katrina, the advisor, here again with another update for you surrounding tax season, right? We'll talk about other things in the future, but right now it's tax season. So we're going to focus right there. And a lot of people have been wondering, why is their refund lower than they expected it to be? Like, why was it bigger in the prior years and now it's lower? Well, I'm going to share that with you and give you the three main reasons why your refund was lower than you expected it this year. Number one reason is you made more money. You made more money. You made more money, so it eliminated or it lowered the amount of credits that you qualified for. A lot of the refundable credits are the ones that you get money back by based upon your income. A lot of the refundable credits, like the earned income tax credit, the mainly the earned income tax credit, is primarily one that's based upon income. The where your income sits based up, it determines how much of that refund you're going to get, how much of that credit you're going to get, and that credit phases out the more money you make. So let me just give you an example of what that looks like, right? Just a second here. I'm going to share my screen and we're going to show you what that looks like as far as the earned income credit. So this is for 2024, right? That's the filing season that we're in right now. So if you fall into any of these categories, so right here, we look at the number of children and relatives that you're claiming as dependents, right? So you can have 0 children and still qualify for the earned income credit. But this is the maximum amount that you can make at your filing status to get that credit, right? And this is if you're single, filing head of household, married, filing separately, or widowed, or if you're married, filing jointly. The most you can make with no children and still qualify for this credit is $25,511 if you're married, filing joint, or if you're single, head of household, or married, filing separately with no kids. This is the most you can make and still qualify for this credit. If you have 1 dependent, then this is the most you can make and still qualify for the credit. Married, filing jointly, this is the most you can make. 2, 3 dependents, right? So this is where that number comes from. If you have any investment income, let's say you have some stocks, if you had $11,600 or less, you can still qualify for this credit. But if you had more of that in investment income, let's say you sold some stocks and got more than that, that eliminates this credit as well. The maximum amount, and this is the maximum amount the credit can be. So if you have no children and you're under this income level, the most you're going to receive as the credit for the earned income credit is $632. If you have 1 child, the maximum credit that you can receive is $4,213. 2 kids, $69.60. 3 kids, $78.30. These numbers, this is the maximum amount. You got to look at the wording here. That doesn't mean that that's how much you're going to get. It depends on where you fall into the schedule. And that schedule is a whole table that lists out where you're going to be at on that table to determine how much of this credit you're going to get. So once you exceed these income limits or get close to this income limit, that credit starts to phase out. So you don't qualify for the maximum amount anymore. And once you hit that income limit, that credit goes away completely. And the closer you get to that income limit, the lower that credit is. So when people are making more money, and the goal is to make more money, right? So when you make more money, this credit starts to phase out until it goes away. So a lot of people have gotten raises over the last couple of years, and specifically last year. And so they've either phased out of this credit or they're so close to phasing out that that credit amount was lower than the maximum amount. That's one reason. That's the number one reason that your refund has been lower than before. Number 2, your child may have turned 17 and they don't no longer qualify for the child tax credit. Even the year that they turn 17, at the end of that year, they don't qualify for that child tax credit anymore. And that's a $2,000 credit, right? So that's another credit that goes away as your kid starts to get older. So they phase out, everything phases out at a certain point. The number one reason that your refund may be lower than you've expected it to be this year is you filed exempt. So if in the prior years, if you were having them withhold money for federal taxes, then that money was coming back to you. When you file exempt, that means you're getting your money throughout the year. So when tax time comes to file, you're not getting that back as a refund because you've received your credit, you've received your money throughout the year. So top 3 reasons that your refund is lower than expected this year: credits, your income may have increased, your child may have gotten older, or you made more money, right? So 3 reasons. Or the fourth one is you filed, really the credits and the child tax credit and the earned income credit are kind of looped together. So the third reason is you filed exempt, so you got your money throughout the year, so you're not getting it back as part of your refund. So those are 3 reasons. If you have any other tax questions or business questions, please place them in the comments below, and I will be back to you soon to talk to you more about taxes, saving, and business. Talk to you later. Have a great day. Bye-bye.